everyone, welcome back. Ready for another deep dive?
Always ready to jump into the numbers.
Today we're going to try to unpack Michael Burry's latest moves.
You know,
Mr. called the 2008 crash Burry?
yeah, his Q4 2024 portfolio has everyone buzzing trying to figure out what he's seeing that we're not.
Exactly. Big thanks to the listener, sent in all this data, a full breakdown of his holdings, the changes since last quarter, some early expert analysis.
It's a lot to process.
So that's our mission today. Decode what this all means. Is Burry bearish, bullish, hiding in a bunker somewhere? Let's find out.
Well, if anyone's building a bunker, it's probably him.
Right. Okay, so first things first. Burry's famous for being a contrarian investor.
Meaning he often bets against the prevailing trends.
So if Agon's running towards something, he's like, nope, going the other way.
Exactly. He believes the market often gets it wrong, and that's where he finds opportunities.
Okay, so that's our lens for today. What does contrarian Burry thinks is about to happen? Let's start with his moves in Chinese tech, specifically Alibaba and JD.com, two of the biggest e-commerce players.
Huge companies, and he decreased his holdings in both.
By how much?
A significant amount. 25% for Alibaba and a hefty 40% for JD.
Whoa. So is he saying Chinese tech is doomed?
Well, it's not that simple.
There's always a but with Burry, right?
Right. This move could suggest he's skeptical of the long-term impact of China's regulatory crackdown on these tech giants.
Okay, so maybe some caution about the overall climate there.
But here's where it gets interesting. He added Pinduoduo to his portfolio.
Which is also Chinese e-commerce. I'm sensing a pattern.
It is, but it's a different beast. They focus on bargain deals and social shopping. A very different model.
So he's not out completely, just shifting his focus within the Chinese market.
Precisely. He's not betting on the sector as a whole, but on specific companies that he thinks will thrive.
Okay, so Chinese tech, proceed with caution, but keep an eye on the disruptors.
I think that's a good takeaway. Now let's move to a sector that's often considered more stable. Healthcare.
Ah, good old healthcare. People always get sick, recession or not.
Exactly. It's usually seen as a safe haven, especially when there's market volatility.
And Burry seems to be doubling down there.
He increased his investment in HCA Healthcare and Oscar Health.
Two very different companies.
And slightly decreased Molina Healthcare, about 10%.
Okay, so not a total exit, but a definite shift in emphasis. What do those companies tell us?
It's interesting because they represent different facets of healthcare. HCA is all about hospitals.
Brick and mortar, on-ground care.
Then you have Oscar, which is more tech-driven, focused on health insurance.
The modern digital side of things. And Molina.
Molina is known for its focus on government-sponsored plans.
Gotcha. So he's not just saying, I like healthcare. He's saying, I like these specific parts of healthcare for these specific reasons.
That's how I'm reading it. It's all about understanding the nuances within a sector.
Okay, so we've got cautious optimism on Chinese tech, a very targeted bet within healthcare. Now, the big question, what about consumer spending? Are people holding onto their wallets, or is there a shopping spree on the horizon?
Well, this is where it gets interesting.
Hit me with it.
Burry added several new companies that suggest he's anticipating a rebound in consumer spending.
Really? But everyone's so worried about a recession.
Right, and that's what makes this interesting. But there's a catch. The focus seems to be very specific.
Okay, I'm all ears.
He bought shares in Estee Lauder.
The makeup giant.
Exactly. Then there's VF Corp, which owns brands like The North Face and Vans apparel and outdoor gear.
High quality stuff.
And get this, he even added Canada Goose, known for those expensive winter jackets.
So, not exactly discount shopping.
Not at all. It seems to be a bet on established, high-quality brands.
Like he's saying people will still spend, but they're being choosy.
Exactly. Especially when you compare it to his trimming of some of those Chinese consumer-focused companies, which were more broad-based.
So maybe a shift in consumer confidence towards reliable brands, especially when there's economic uncertainty?
That's one interpretation, and it aligns with what we're seeing in other sectors like healthcare, where he's prioritizing stability and strong players.
Okay, this is starting to make a lot of sense. We've got a good foundation for understanding Burry's overall strategy, but I'm guessing there's more to unpack.
There are a couple more moves that really caught my eye.
Okay.
One of them
Lay it on me.
is a bit of a head-scratcher.
Ooh, a
Really
good mystery.
Bought shares in a company called Magnera Corp.
Magnera Corp. Is that like a
Pretty under the radar.
not much
Startup or something?
information out there?
Okay, so if even the experts are a little stumped, this must be really interesting.
Yeah, it's...
Why would Burry, a guy known for like deep research, invest in something so obscure?
It could be a classic Burry move, you know?
What are the theories?
Seeing potential where others don't.
Yeah, betting on a hidden gem before anyone else catches on.
Uh-huh.
Maybe it ties into a larger trend we haven't spotted yet.
Ooh,
Or maybe
this just keeps it
small speculative play.
Okay.
We'll have to keep an eye on it.
It's like a little side quest in this epic portfolio adventure.
Exactly.
I'm already digging around online for clues. Okay, so we've got our mysterious Magnera Corp. What's the other intriguing move?
This one is a little less flashy,
Okay,
but just as important.
all right.
Burry significantly increased his stake in American Coastal Insurance.
Insurance.
Yep.
That doesn't exactly scream high growth or
This day.
tech revolution.
Right.
Why would he be interested in that?
Well, remember how we talked about Burry being a contrarian
Yeah.
and wanting to manage risk?
Uh-huh.
Well, insurance could be a really smart play when things get shaky.
Okay.
Think about it. People still need insurance,
Yeah, that's true.
no matter what the economy's doing.
People always need insurance.
And premiums can actually rise during times of uncertainty,
Oh, interesting.
which is good for the insurance company.
So it's less about betting on insurance to like skyrocket in value and more about having a steady, reliable asset when other parts of the market might be
Exactly.
going haywire.
It's like having a financial safety net.
Right.
You have your high growth bets,
Makes sense.
your calculated risks, and then you have your more conservative positions to balance things out.
Yeah.
That's what makes this portfolio so fascinating to analyze.
Yeah.
It's not just about picking winners.
Right.
It's about crafting a strategy for different possible scenarios.
Okay, so let's bring this all together for our listeners.
Yeah.
We've covered a lot of ground here, from trimming Chinese tech giants
You have.
to diving into specific healthcare niches to tedding on premium brands when consumers are tightening their belts
Right.
to even having a little insurance on the side just in case.
Just in case.
It's like he's playing 3D chess while everyone else is still on checkers.
That's a great analogy. And by looking at the overall picture, we can start to see some of Burry's big picture thoughts.
Yeah, what do you think is going through his head?
It's like he's anticipating some major market shifts
Uh-huh.
and positioning himself to not only survive, but thrive.
So how can our listeners apply this Burry-level thinking to their own portfolios? I mean, I'm not sure I have a crystal ball like he does,
Well,
but I'm willing to learn.
the key takeaway here isn't to mimic Burry's every move,
Right.
but to understand the principles behind them.
Okay.
He's not just following trends.
Yeah.
He's thinking about the why behind them
But why?
and making calculated bets based on that.
So it's not about what stocks should I buy, but more about how should I be thinking about the market and my own investment strategy.
Exactly. It's about developing your own investment philosophy.
Got it.
For example, we've seen how Burry prioritizes diversification.
Yeah, he's not putting all his eggs in one basket.
He's spreading his bets.
Right. It's like that old saying, don't put all your eggs in one basket, but actually understanding the nuance behind it.
Exactly. And he's also not afraid to be contrarian.
Yeah.
He's willing to go against the crowd if he believes the market is mispricing something.
Uh-huh.
That takes courage, but it can also lead to big rewards.
It's about having the confidence to do your own research and make decisions based on your own analysis, even if it means going against the grain.
Precisely. And finally, don't forget about risk management.
Right.
Burry's clearly thinking about that with his moves in insurance and healthcare.
Yeah.
It's not just about chasing the highest returns.
Uh-huh.
It's about protecting your downside as well.
It's like building a portfolio that can weather any storm.
Exactly. You have your high growth bets, your more stable assets, and then those defensive plays that can help you navigate through tough times.
Right.
Burry's portfolio is like a masterclass in how to think about investing strategically.
Yeah.
It's about research, diversification, calculated risk-taking, and a long-term perspective.
This has been incredibly insightful. Okay, so we've decoded Burry's moves, but there's one last piece of the puzzle.
Oh, yeah.
That mysterious Magnera Corp.
Right.
It feels like a cliffhanger. Any parting thoughts on that before we wrap up?
Yeah, I think we need to put a pin in Magnera Corp for now.
It's definitely a wild card.
It is.
But hey, maybe that's a good challenge for our listeners.
Ooh, I like that.
If anyone uncovers any information about Magnera,
Yeah.
we'd love to hear your theory.
Send them in.
It could be the key to understanding
Right.
a whole other layer of Burry's strategy.
Exactly. And that's what makes this whole
It's like the bonus level.
deep dive
Yeah.
so
It's
fascinating.
not just about looking at a list of stocks.
Nope.
It's about understanding
It's about the
mindset of one of the most successful investors of our time.
Absolutely.
And using those insights to sharpen our own thinking about the markets.
Love it.
I don't know about you, but I'm feeling a lot more informed
Me too.
and maybe even a little inspired to take a closer look at my own portfolio.
Yeah, always a good reminder.
So to wrap things up, what are the key takeaways our listeners should really remember from Burry's Q4 2024 moves?
I think the biggest lesson here is the importance of thinking independently.
Yeah.
Burry isn't just following the crowd.
He's doing his own research.
He's identifying opportunities that others might be missing.
And he's not afraid to make bold moves, even if they seem unconventional.
Exactly. The second takeaway is diversification.
Right. We saw how Burry is spreading his bets across different sectors.
Across the board.
And even within those sectors, he's choosing a variety of companies.
Not putting all your eggs in one basket.
Right, exactly.
It's a classic strategy for managing risk.
And the third takeaway is to always be aware of the bigger picture.
Yes, Burry's move suggests he's anticipating some significant changes in the market.
Whether it's a recession, inflation,
knows?
something else entirely. By understanding those potential shifts, we can position ourselves to weather the storm and come out stronger on the other side.
Couldn't have said it better myself.
This has been a fantastic deep dive. Thanks for walking us through Burry's portfolio with such clarity and insight.
It's been a pleasure. I always enjoy unpacking these complex financial puzzles.
And a huge thank you to our listener for sending in this amazing source material.
Yes, thank you.
We love getting your requests and exploring the topics that matter most to you.
Keep it coming.
So keep those deep dive requests coming, and until next time, stay curious and keep learning.